Hey all, good morning and welcome to ShareTreck. It's the 8th of August 2022. This is Raj here and you're in the morning show. The indices are looking great. I just had a quick peek at them before I started recording this video. Also, genomics are looking pretty good, at least pre-market. So let's get started. Welcome back. I was looking at the Inflation Reduction Act over the weekend, just trying to get a feel of how it's going to benefit companies and which are the companies that might probably have a negative reaction to this. And what I have come up with is that automakers are likely the winners in this Inflation Reduction Act. Electric cars, fossil fuels, and renewables seems to get a major benefit. And also utilities get tax breaks for renewable energy, which means that companies that are manufacturing generators that create renewable energy or solar panel companies, those are the kind of companies that are likely to get indirect benefit because now utilities will try to increase their portfolio of renewable energy in order to get more tax breaks, and that will generate demand. That said, the companies that are most likely to get impacted negatively by this act are tech companies, pharmaceutical companies, and it seems that Amazon is likely to pay more tax. I still don't understand how. It'll come to me maybe a couple of weeks down the line when there is more research on this. But that's the verdict, at least at this point of time, by some of the leading business publications. Here is another reminder for us. I gave you a reminder last week how really sophisticated investors have not been able to predict the market. The example was Berkshire Hathaway, which incurred big losses on their investments. Here is another reminder for all of us that even more sophisticated investors are not able to time the market properly. SoftBank posted one of its biggest losses at its Vision Fund investment unit for its Q1 2022 quarter because the technology stocks that they invested in continued to get hammered due to rising interest rates. Their Vision Fund posted a $21.68 billion loss for the quarter. This is the second largest quarterly loss for the Vision Fund. So with that said, please don't beat yourself up if you see red in your portfolio. The best of the best have not been able to avoid that. That said, Pfizer seems to be hedging its sickle cell disease bets in the genomic sector because Pfizer announced that it will pay $68.5 per global blood share, representing a premium of about 7.3% to the stock's closing price on Friday. Shares of Global Blood, which makes a blood disorder drugs called Oxybrata, rose 4.5% following the deal announcement. Oxybrata was first approved in 2019 to treat sickle cell disease among patients aged 12 or older, and last year, somewhere around December, the company received approval for treatment of the condition in younger patients as well. So the whole spectrum has been increased right from younger patients all the way to adults, and therefore I think Pfizer found it very attractive and they have bought them over. This means that they're hedging their bets for sickle cell disease treatment, once and done treatment in the genomic side. And Pfizer can afford to do this because they have lots of funds, they made good money, and they are cash rich at this point of time. And there are more conflicting signals coming up with regard to the state of the economy. US companies reportedly curbing investment as they await Fed moves. Last month, we heard that the same thing about Canadian companies. And even as companies curtailed adding new buildings and expansions into new markets, they kept hiring. This is shown by the US job growth data that we saw last week. US job growth accelerated in July, and the US job market has recovered to a level it was before the pandemic. So it is very, very confusing at this point of time why this is happening. But I have another take on this. It's possible that we have heard about work from home being 41% of the employment contingent going forward in the next quarter. So it's possible that companies are still able to expand their operation without actually increasing money in bricks and mortars like buildings and facilities. So that's one way of looking at it. And if that is true, then there is no confusion with this, and we are in a new chapter for company growth, and we'll have to stop looking just at real infrastructure when we are looking at potential growth in the economy. With that said, let's look at a new statement from New York Federal Reserve, which says that the stress on global supply chains eased last month to its lowest level since January 2021. The slowdown appears concentrated in smaller companies rather than big name e-commerce and retail firms, and that's possibly why we are not able to see much evidence of it, but it bears out in the strength of the Russell's index, which has been doing pretty well. So that said, I think I would like to go and have a look at our pre-market action. Let's go into the TradingView platform. So now here we are in our TradingView platform, and I'm going to get into Nasdaq futures. Here we have the Nasdaq futures. Nasdaq futures are up 0.62%. It's still on a bullish channel, so I'm not too much worried about it. There's a bit of consolidation happening out here. Whenever there's a consolidation on an upward moving channel, I'm not that much worried because the chances are that it's going to break out on the upper side. We still have a little bit of room for Nasdaq futures to go up, so before it becomes overbought. So I would consider this to be a positive for the market open today. I'll say that futures are indicating bullish open. Now let's look at US oil. US oil has continued to show weakness, and it's still trying to get some support from our line of support here at 88.00. Oil is right now at 88.18, down 0.40% pre-market. The chances are that it's likely to go down further because there is overall demand destruction and weakness in the market. So that's where I think it will go, and that's positive for our shares at this point of time. You can see the MACD is down and the momentum is also at the very bottom. So US oil is definitely weak. If you look at QQQ is pointed downwards. There is still plenty of room for it before it can become overbought, and pre-market it's up 0.71%, which means that the momentum is turning upwards. And we are still going to have to deal with this diagonal line of resistance out here. And I'm hoping that we break through this today because we are in a bullish pennant, and bullish pennants always break upwards unless something drastic happens that is unexpected. S&P 500 is up 0.55% pre-market, and we still have resistance out here at 415.60. Currently, we are at 415.75, which means that we have broken through this particular resistance. So hopefully we'll do better in the market today. At least the pre-market shows that market open is going to be green. And when we look at this positive out here, we should also notice that the momentum has still got plenty of room. Momentum is only picking up, and we have the RSI still waiting to be overbought. So S&P 500 can move up today. Russell's average is up 0.77% as of Friday, and pre-market it's up 0.59%. So that's also another big positive in my books. We are aiming in all the indices to challenge the 200-day exponential moving average. So if all the indices climb over the 200-day exponential moving average, we'll be in a stronger position, and the bull market will be much more strongly entrenched. So that said, let's look at Dow Jones Industrial Average, which is again in a bullish pennant. Pre-market, it's up 0.50%, and it's sitting at 329.61, which shows that we have broken above the bullish pennant, and here again we are going to be challenging the 200-day exponential moving average. So everything is moving well. There's plenty of room in the RSI for this index to be overbought. So everything looking good here. The VIX has of course gone up a little bit for today, and that's not a positive. But it's being constrained by the 9-day exponential moving average. So I would look forward to the VIX falling below 21.20 and approaching 20. And that's what I would look forward to. And then we'll have much more solid ground for the bull channel to take hold. Put call ratio. When we look at the put call ratio, we can see that we ended Friday in a very bullish note as far as the put call ratio is concerned. We are at 0.87, which is below 1. And XLY by XLP was risk off, but today I think we are going to be risk on. US dollar index is down 0.24%. Again, this is good overall for the US economy, and this makes sure that other countries share the load of bringing the economies out of the global economy out of the recession. This gives a bit of a breather to US economy. That said, let's go and have a look at the index movers in the technology sector. I'd first look at Amazon, which is up 0.85% pre-market, and it's continuing to be above the 200-day exponential moving average. Very strong indeed. But we have our momentum, which is pretty high, and RSI is overbought. So we need to see a bit of consolidation sideways before we move up further. We need to cool down the RSI. MACD is still bullish, so everything is looking good for Amazon, but don't expect fireworks. And then when we look at Apple, Apple is up 0.56% pre-market. Again, the situation is overbought out here, so we need a bit of a moderation. Still on a bullish channel, nothing to worry about. Microsoft, Microsoft is negative marginally, minus 0.39% pre-market, and momentum is still above average. So I'm hopeful. MACD is also bullish. So I think the consolidation is complete, and we need to stay above the 200-day exponential moving average, and we'll be fine today. We are still above the 200-day exponential moving average. So I'm looking forward to some consolidation and then a breakout upwards for Microsoft. Google is up 0.74%, and it's got plenty of room before it can be overbought. So Google is showing a very positive approach. And if I look at FNGU, FNGU is up 2.09%, which is the FANG index. So I think overall the market looks good, at least for the open session and maybe the first half an hour. We'll see what happens when the professional traders come in and start moving the market. I think every index is trying to cross the 200-day exponential moving average. That is the highlight for today. It may not be fireworks, but I am expecting consolidation and potentially a slightly positive move for the Nasdaq at the time of close of the market. With that said, let's go and look at our crypto sector. Coinbase is again up 8.44% pre-market. The BlackRock effect is still taking place, and we are looking very good out here. I'll take that. Bitcoin is up 5.35% already, and it's continuing to show that the bull channel out here is valid. Our next challenge is going to be the 50-day exponential moving average sitting at 24319.0. Right now we are at 24201. So another 100 points to go there, $100 to go there. And after that, we have a resistance from 28,993, which is a horizontal line of support out there, and horizontal line of resistance out there, which is also intersecting with the 100-day exponential moving average sitting at 28,774. So it's going to be strong resistance out there, but right now the going seems to be good for Bitcoin. Of course, they will all be impacted by Nasdaq. If Nasdaq goes down, all of them will start going down. Now, that said, let's look at commodities. In commodities, I'm going to go to wheat. Wheat is still gaining price, and it's still strongly on the bull channel. This is not good for the inflation story. So we'll have to watch this going forward. This is likely to put more pressure on inflation, and therefore increase in interest rates, and indirectly it's going to push the shares down. So it's bearish for our shares. Copper is still on the bull channel, even though it has given up a little bit. I'd consider the moderation to be good, and overall that shows the strength in the economy. And with that said, I'm going to go into the genomics sector and see what's happening in the genomics. Bluebird is at the very top with a gain of 22% yesterday, and also it's up 2.5% today, and it's strongly showing a bullish channel. So this diagonal channel, which became resistance earlier, is now back to being a support, and today we are already at the top end of this support. So our next resistance is going to be 6.44. Right now we're at 5.70. So we have a 70-cent window to cross today, and let's hope for the best. Invitae is up 9.52% as of Friday close, and today it's down minus 0.43%. And we have a bullish MACD, and momentum is also picking up. We have earnings coming on the 9th, so it's a pre-earning jitters out there. SQZ is still positive from yesterday, no trades pre-market. Vertex has no trades pre-market. Allogene is up 0.26% pre-market. PSEV is up 3.96% pre-market. Very, very strong upswing out here, and that takes us above this horizontal line of resistance that we had, minor line of resistance. I'm going to mark this green, and there is still room for it to be overbought. So we can see more positives for PSEB today. CRISPR Therapeutics is flat pre-market. Again, pre-earning jitters out there. Verve is up 1.24%, again on a bullish channel with plenty of room before it becomes overbought. ARCG is up 2.15%. I think it's still strongly on the diagonal line of support out here, which is the bull channel. Very happy about that. DNA is up 1.95%, about time that it becomes stronger. Still facing resistance at 3.20. The momentum is pretty good, and RSI has plenty of room before it becomes overbought. MACD is also bullish, hoping for the best for DNA today. Editas is up 2.06%, again in the bullish channel, and trying to challenge the 200-day exponential moving average. very positive moves. The only concern I have with Editas is that it's very close to overbought, so it needs to cool off a little bit, maybe move a little horizontally, stay above 18.20 and continue movement upwards towards the 200-day exponential moving average. That said, IDNA has got no trades pre-market. Beam is down minus 0.47% pre-market. I guess it's pre-earning jitters. Earnings are on the 9th, which is tomorrow. Novartis is up 0.13% pre-market. Teladoc is up 0.75 pre-market. Caribou Biosciences is marginally down 0.12% pre-market, and it's still below the bull channel out here from earlier. I'm going to mark this red to show that it's still a resistance for us. But we are, if we cross the diagonal line of resistance today, if we break up above that, then it will again become a support, and then we'll be charging resistance at 10.04. Right now, we are still at 8.55 with no trades pre-market. Regeneron, no trades pre-market. Illumina, no trades pre-market. Pfizer is up 0.04% pre-market. IMTX is up 4.98% pre-market, and Intelia is up 0.73% pre-market. So overall, I'll say the genomic sector is looking very positive and looks at opening predominantly green pre-market. With that said, I'd like to bring this video to an end. I hope you liked this video. If you did, please press a like out there so that YouTube can promote this to other viewers. And if you're not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.